Hello everyone, welcome to this video in Finance Simplified Series. In this video, we will be talking about the various terminologies that are being used in stock markets. So it's very important for you to understand these things which are going to be taught in today's session. So let's start. First thing is LTCG. It means long-term capital gain. If a person holds share for more than 1 year and earns profit, it is known as long-term capital gain LTCG. Okay, if you as an investor, if you are holding share of a particular company, say suppose Reliance Limited, for a period more than 1 year, and the profit which you are earning from there, that profit is known as long term capital gain LTCG. If you earn more than 1 lakh rupees, then it is taxable. You have to pay tax on it if you earn LTCG more than 1 lakh rupees. Less than 1 lakh rupees is not chargeable at all, means not taxable. Second thing is dividend. Dividend is what? The return on investment in shares is known as dividend. From 2019, income on dividend is taxable. If you even earn a income of 100 rupees in dividend, that 100 rupees is going to be taxable. You have to pay tax on the 100 rupees. So this is known as dividend. Whatever returns you are getting after purchasing that share is known as dividend. Now, face value of a share. The original price for which the share was bought by the promoters of the company is known as the face value of the share. There are two prices. One is face value and one is market value of the share. Market value means currently the what is the market value of the share. Suppose Reliance Industries is 2000 something, Reliance Industries, TCS it is 3000 something. So this is the another market value of the share. What is the face value of the share? It means the price for which the share was initially listed in the stock markets, or the share which it was bought by the promoters of the company. Promoter is a person who starts the company. So it is known as face value of share. Then you have share certificate. Share certificate is given to the shareholders when they purchase the share. It includes name of the shareholders, face value of the share, number of shares purchased, and etc. The face value of the share is decided by the initial promoters of the company. But one thing you must remember, that share certificate used to be in previously people used to have physical share certificate, but now it is not physical. As you know that everything is now in electronic form, which is known as demat form. So now nothing is in physical form. So basically, in place of share certificate, you can also get known as contract note, which your broker will give you within 24 hours after purchasing a particular share. So now share certificate is not in use, but still many organizations have some share certificates. So that's what you must know what is a share certificate. Then what is an annual report? Whenever you're going to purchase the shares of any company, suppose and the most best example is IPO. Suppose there is an IPO of Zomato. Zomato's IPO is coming very soon. As on this day, we have heard news that Zomato's IPO is coming. So Zomato's annual report I have to check that what are the finance and all the things, because in annual report it is a document which is issued by the company, where a company compulsorily have to disclose about the number of shares in physical form and how much of the information as well. So remember this thing, annual report is something which every organization, big to small, have to release every year, which discloses some very interesting facts and very important information which an investor have to understand before investing in that share. So it is known as annual report. We will be talking about consolidated and standalone financial statements, about annual reports in the upcoming videos as well, and they will understand what is the true importance of annual reports. Then you know what is dematerialization, means holding securities in electronic form. And this is an interesting fact that almost 1% of the total share of every company is held in physical form. Still, almost 1% of every share of every organization is held in physical form. Now it is market timings. At what timing market starts? Before doing this thing, Saturday Sunday market is completely closed. On any public holiday, whether it's a festival or it's a national holiday like Independence Day or something, market is closed on that day. Both BSE and NSE will you will be unable to purchase anything. You can purchase, but it will be executed on the day when the market will open. That is something. This is a market timing. 9 to 9:15 is a pre-ordering market session. From 9 to 9:07 is you can place an order. 9:08 to 9:11 is the order matching, which has been done by stock markets. 9:15 to 3:30 p.m. is the time of stock markets. It is a general timing. Remember, 9:15 to 3:30 is a general timing for the stock markets. 3:30 to 4 o'clock is the timing for brokers. It is their timing, is not ours. We can purchase and sell shares only between 9:15 to 3:30 in the market value. We can purchase share as 9 o'clock, 7 o'clock, morning 6 o'clock as well, but it will be executed at 9:15 exactly. So this is something which you must understand. There is something known as 9 to 9:07 or 9:08 to 9:11. In 9 to 9:07, or you can place an order can be placed but couldn't be sold. Okay, 9:08 to 9:11 is the time when the order matching is being done by the stock exchange. It's something different issue. 9:15 to 9:30 is the basic time, and as you seen down there is a thing mentioned known as 4 p.m. to next day 9 a.m. It is known as after market hours. You can place order in this time, but it will be executed the next day at 9:15. There is nothing known as that if today at 9 p.m. at night, 9 p.m. I'm speaking of, or 10 p.m. at night I couldn't purchase share. I can purchase the shares, but the shares will be executed the next day at 9:15, or the day when the market is open at 9:15. You can purchase share during the after market hours. Because of after market hours, the price of shares up goes up and goes down. You might have noticed, if you are there into stock markets, or if you have any idea, the closing price, today's closing price suppose is rupees 100, but tomorrow's opening price is 115. You will find that why this happened. Today it was closed at 100 rupees, this share price, so tomorrow it must start at 100, right? but it but it's starting at 110. So where is that 10 rupees is coming from? This 10 rupees is coming from this after market orders. After market orders, AMO, means people are purchasing shares beyond the market timings, means they're purchasing shares beyond 3:30 p.m., but those shares have been executed the next day at 9:15. So the opening price of the share is getting fluctuated because of this after market hours. So this is something which you must know. Now the last thing is gap up opening and gap down opening. The very same thing which I just told right now. Gap up opening means if the share price opens at a price higher than the previous day closing price, it is known as gap up opening. Means today the share price is there at 110, but yesterday it was 100. Means today when the market has opened, the share price has increased. It is known as gap up opening. And gap down opening means what? If the share price opens at a price lower than the previous day's closing price, it is known as gap down opening. If today my share price is closed at 100 and tomorrow the share price is opening at 90 rupees, it is known as gap down opening. And the last traded price will be known at 4 p.m. because till 3:30 we as investors could purchase and sell securities, and from 3:30 to 4 it is the time of stock brokers. So last traded time which we will find will be at 4 p.m. The actual price of the share, the actual closing price of any share as of today will be evaluated at 4 p.m. itself, not 3:30, because after 3:30 the prices of securities might vary, because from 3:30 to 4 o'clock it is the time of brokers to trade in the securities. So that's all about this video. I hope that you have learned certain new concepts. We will meet in the next video as well to discuss more about the same. Thanks for joining.